Our integrated business model, consisting of energy, fuels and chemicals, demonstrates its strength and resilience, especially in a challenging market environment. In the third quarter, our adjusted operating profit increased by 20% to around 1.3 billion euros, primarily due to strong refining margins and improved refinery utilization in the fuels segment. With nearly 1.5 billion euros, the third quarter cash flow from operating activities before net working capital effects was at a very high level. Together with a sound balance sheet, with a leverage ratio of only 16%, this gives us an excellent basis for growth and our ongoing transformation. We are driving this transformation forward in a value-creating and responsible manner. Our strategic direction is adapted to economic realities without losing sight of our long-term sustainability goals. Accordingly, we have adjusted some of our targets for 2030, as communicated in our recent strategy update in October. In the energy segment, we aim to increase E&P production to around 400,000 barrels of oil equivalent per day by 2030, with a clear focus on natural gas. Neptun Deep, the largest offshore gas project in the EU, plays a key role here. This mega project, operated by OMV Petrom, will increase our natural gas production by around 70,000 barrels of oil equivalent per day and will contribute around 500 million euros to the operating result by 2030. This is complemented by further development projects in E&P, amongst others in Norway, Austria, Libya and Abu Dhabi. In addition, we are driving the expansion of an integrated power business in Southeast Europe with OMV Petrom and already have established a strong project pipeline for renewables of more than 1.3 gigawatts by 2030. In the fuels segment, we will continue focusing on the close integration of our refineries with the chemicals business and expect further growth in the retail business. Furthermore, we are positioning ourselves to seize opportunities in sustainable mobility, especially in the sustainable aviation fuels, electromobility, and chemical feedstocks. All these measures are intended to help increase cash flow from operating activities in the fuels segment by over 50% by 2030 compared to 2024. In the chemicals segment, we have taken an important growth step with the establishment of Borouge Group International, or BGI for short. BGI is excellently positioned. First, around 70% of production has a clear feedstock cost advantage, with access to low-cost ethane. Second, the new company benefits from Borealis' innovative strength and high share of specialty products. Thirdly, BGI has a promising pipeline of growth projects that will be realized in the near future, with the bulk of investments already made. Fourth, we have identified significant EBITDA synergies of more than $500 million, which are expected to be realized until 2030. All this will lead to profitable growth with an expected EBITDA of over $7 billion per year across the cycle. In addition, we at OMV are implementing a group-wide efficiency program, which aims to generate more than 500 million euros in additional cash flow from operating activities per year, including 400 million euros cost savings by the end of 2027. With our adjusted dividend policy, OMV shareholders will directly benefit from the significant floor dividends from BGI. From 2027 onwards, we will distribute half of BGI dividends attributable to OMV, as well as 20-30% of the cash flow from operating activities from the remaining business. Importantly, we will maintain the progressive regular dividend and continue to pay an additional variable dividend when our leverage ratio is below 30%. The new distribution policy would have resulted in a 6% higher dividend for the financial year 2024 on a comparable basis. This underscores OMV's clear commitment to deliver attractive returns to our shareholders.